Good evening and welcome to tonight's webinar. It's a public webinar this evening, so we have a number of people joining us as part of their trial or even just by invitation from the database. So thank you for taking the time to attend tonight's webinar. The information provided tonight is general advice only, and Investor Signals offers a broking account service which includes access to the model portfolios and the algorithm investment ideas presented in tonight's recording. If you'd like to know more about the broking account, please contact me on 1300 614 002. Just a reminder, on our website you'll find information regarding the subscription service, which is the technology I'm presenting this evening, as well as information on the broking account and managed fund. And the details are up on screen there if you'd like to discuss any aspect of those services with me. Starting this evening with a quick look at what's happening in the US markets, and over the last 10 days we've seen selling in the US market. Up on screens the Nasdaq. It's been interesting, just as US interest rates started to push higher, we had the sell-off in the market, but in saying that, if you look at the 10-year, the yield on the 10 years as a result of increased fears of obviously COVID impacting economic activity, we've seen the bonds retreat from roughly, and this is again referencing the 10 years, they've retreated from around 1.6% in the US down to around 1.4. So whilst on one hand we've got the Federal Reserve saying they're going to withdraw liquidity from the market suggesting that that may lead to tighter interest rates, the bond market at the moment is not expressing that same view. And the relevance of that is it sets up better buying patterns, or at least buying support in companies or sectors that benefit from low rates. So you've seen infrastructure, real estate investment trust, consumer staples as an area of the market that's done well over recent days. So the Nasdaq is below the 10-day moving average, so that gives us a little bit of caution, and as a result of that, when we go through the top 50 stocks tonight, the buying setup in our local technology names is there's relatively few opportunities there that'll be the focus. There are a handful of stocks that I think do present good opportunities, and part of this evening will be to focus on those. But we continue to watch the US market just with interest to see whether it tracks below this 10-day average. If we look at the S&P 500, again, similar pattern over the last 5 or 10 sessions. We've seen a slow deterioration and a price action below the moving average. And then on our local market, I think the picture here looks a little more supportive. So it's not unless the index really broke below last Thursday's low, which is 7,168 points, which is the low of Thursday there where the crosshair is. But for the moment, I'd suggest that we're looking at some support above roughly that 7,150 level, and we're pushing sort of 100 points higher than that. So a reversal that takes out that low is going to be negative for our market. Selecting the watch list and then going into the drop down, and from the list here I'll go through the top 50 stocks and then just have a look at what's been posted on the blog over the last 7 days. So from the list, select ASX top 50, get the percentage gains to the top, and then organise them over here in the right column under buy. So we're looking at the best performing stocks that are under buy signal, and I'll get a part the way through that list and it'll stop from buy as they switch into sells. So let's have a look at the first stock that's under buy conditions. The best performing stock in the top 50 today was Coles. If we backtrack and look at what's happened here, it switched from sell conditions into buy conditions on this high-low formation around just under $17. The stock's now trading $17.80. It's both Coles and Woolworths, I suspect, are mainly likely to move sideways. We did see some cost pressures in the last result, so the market's been probably a little bit conservative on what the expectations are for earnings, and we may see that they actually surprise a little to the upside. So whilst Coles and Woolworths trade on a
Bulletin
fairly
received.
high PE ratio, I tend to think they're pretty well supported in the market. So if you're looking for income contributors, it's a consideration for portfolios. And both Coles and Woolworths you'll find in our top 50 model portfolio there. So Woolworths under buy signals, it's performing well. Wesfarmers under buy, so the original addition to the model portfolio here was some time back when it shifted from sell signals into buy there at around $43. And it's performed very well since then. So where we sit at the moment is there's value if we were to see a pullback down to around that $55 level in Wesfarmers. We're not expecting a great 6-month result through till December, so we're assuming the stock price mainly bumps sideways, but maybe in the early part of the new year we see a re-acceleration of the uptrend. We think the sort of longer term fundamentals there are very positive for Wesfarmers. James Hardie performed well from the recent buy signal there at around $46, now pushing up to $56. Bramble. So this is one that I think's worth just you making a note of, and I've commented on this on the blog and again today. So the setup here is supported around this 975, 980 level. The price action back above the 10-day moving average there. And for traders, you could run a stop loss below that pivot low there, roughly around $9.80, and you may even just, another way of viewing it for shorter term traders is simply sticking with the trade as long as the price action stays above the 10-day average. But once I finish going through these stocks, I'll click on model portfolio and we'll just have a look at the dates that various stocks were added and the performance since being included. Goodman Group under buy signals, so it originally switched from sell to buy signals in or about February of this year. The stock's performed extremely well since then, so it was added at around $17, now pushing up towards $25, and the more recent cluster of signals there at around $20. Goodman Group, as you know from prior recordings, delivering double-digit growth, but is expensive, relative to, I guess, historic levels for REITs. So to see Goodman Group trading on just over a 1% dividend yield puts it into context, just how much you're paying up for that growth there. Computershare, we continue to like this, but we think maybe starting to look a little bit expensive, and if you don't already own it, just be patient and wait for a deeper pullback or another buy signal. If we look at the performance of the recent buy signals, it switched from sells into buy. At that point it was added into the model portfolio, and then we had subsequent buy signals that have all performed very well there on Computershare. ResMed, the history here, it switched from sell conditions into buy. It was added into the model portfolio at that point. The subsequent signals have done a good job of picking up sort of additional higher low formations and additional entry points. We're a bit cautious here on the valuation, and if you don't already own ResMed, just be patient, wait for a slightly deeper pullback and another algorithm buy signal before you look at adding that to your portfolio if you don't already own it. Mirvac, again, I suggest that along with Brambles, maybe make a note of this name. These are two open trades that we've got at the moment. In the case of Mirvac, we see support there at around 275. We could even sort of shift this line up onto that higher low and shuffle that one up there. So that kind of structure there with that higher lows, a bullish setup for a trade. No guarantees that momentum continues, so if you're running short-term trades in your portfolio, you'd be looking at a stop loss either below the pivot low back on the 17th or even below the pivot low there on the 2nd of December. So to put some numbers on that, the pivot low on, or not so much the pivot low, sorry, the higher low on the 2nd of December is around $2.82. The actual pivot low would be $2.75, so you'd be running stops under either of those 2 points as an example. But we like Mirvac. We think we could see the earnings surprise on the upside there. GPT, a little more expensive, less short-term opportunity there, and as I've discussed in prior recordings, an alternative to owning too many of these REITs would be to continue to hold the SLF, which is an ETF that gives you basket exposure to these REITs. But GPT grinding higher. Woodside Petroleum, this is an opportunity in the market, adding Woodside at around this 21.50 level. Looking into the first quarter of the new year, I'd expect to see Woodside at higher prices than where we are today. CBA is under buy conditions. It originally switched from sell to buy there in February earlier this year at $81. It's since rallied up to 110. It's pulled back to 92. We're still a little bit cautious on the growth trajectory for the Australian banks. We're seeing that reflected in fairly flat revenue growth, only maybe 1%, 2% at the best, in some cases negative 1% or 2%, so it's fairly flat. That top line growth in the banks is good discipline on the cost control side of it, but nothing meaningful that materially adds to the operating profit. So it seems that it's an environment that in a good outcome, banks move sideways in a sort of risk-off concern for the market. The banks have downside risk. So I just think you need to continue to keep the position sizes relatively small. I don't think it's an overweight call in the banks at the moment. Stockland's roughly bouncing along support there at around that $4.30 level. Origin Energy is a new addition to the model portfolio, so I think there's room for Origin and Woodside Petroleum in your portfolios at the moment. So you can see here it's switched from sell conditions into buy conditions at around $4.70, and it's a new entrance into the top 50 model, as is Qantas. It's just been added into the top 50 model. NAB is in the model as well, support there at around $27. Macquarie switched from sell conditions into buy conditions in May this year at around $150, and it still sits in the model portfolio. Sonic Healthcare, under algorithm buy signals, it was added into the model there at about $38. The stock's now pushing $42.50. Westpac, under buy conditions, but is trading below the entry point. So the original switch from sell conditions into buy conditions there at around $24.30, and we've obviously had a deeper sell-off there in Westpac. I'll continue to monitor that, but we may see Westpac removed from the portfolio in the early part of the new year. ANZ under buy conditions, support there at around that $26, but again view that the bank's mostly just bumping sideways. Cochlear, I suggest again maybe adding this on, making a note of Cochlear as a stock to keep a close eye on. I'll draw your attention to the entry opportunity via the blog. If you're running an investment portfolio, or if you're tracking the top 50 model, you're already holding Cochlear, so it's switched from sell conditions into buy there at around 195. Rallied up to 260, and now we've had this retracement back to 210. We still seem to be in a sort of low, a negative structure here at the moment, but the fundamentals support a further higher low pattern developing here in Cochlear, so I'd be surprised to see it break much below that 200 level, and there is a buying opportunity there for Cochlear if you don't already own it in your portfolio. Telstra's performed well since the recent buy signal there at around $3.70, now pushing just over $4. Horizon's underperformed, so it was added into the model portfolio at about $3.80, and it's sold off now down to $3.30. I still suggest being patient with Horizon. The dividend yield's attractive there, and the value's starting to look fairly compelling there for Horizon. Sydney Airport's in the model, but obviously subject to the finalisation of the takeover. Ramsay Healthcare is a new addition to the portfolio, and down here at around $65, I think you're looking at a support level where you may want to look at adding it to the portfolio. Aristocrat Leisure's delivering strong earnings growth. The original switch from sell conditions into buy there at around that $30 level, just below $30, has performed very well. The subsequent signal there in January this year picked up the low again at around $30. We had the rally all the way through to $50, and then we've had the pullback to around $42, and another fresh round of buy signals here on this higher low formation. And given the strength in the earnings, if you don't already own Aristocrat, aristocrat. Keep the position size small, but it is a buying opportunity on this weakness here. Tabcorp under buy conditions, bumping sideways, and a good contributor from an income standpoint to the portfolio. Lendlease is a recovery opportunity. Looking out 12 months, maybe 18 months from where we are today, we expect to see much stronger trading conditions for Lendlease, and it could be a surprisingly strong stock over the next year or two that maybe not a lot of people are focusing on at the moment. Suncorp, early stages of maybe finding buying support here at around this $10, $10.75. If you're a trader, just be patient, wait for the price action to convincingly sort of trade back above that 10-day average, but could be starting to look a little bit oversold where we are at the moment in Suncorp. South 32 bouncing off support there at around that $3.40 level, so the most recent signal there at $3.40, stock now pushing $3.70. If we backtrack a little bit further, it was added into the model there at $2.75, and it's performing well. Treasury Wines under buy conditions, expecting better earnings results over the next 6 to 12 months out of Treasury, so be inclined to be a buyer of this on any weakness. So I'll continue to keep you updated the blog regarding that. Rio, this is a stock that you can pick up at a discount to the original entry level, so Rio shifts pretty much to the top of our list as our preferred iron ore exposure at the moment. And Xero on the technology side, we really like this business. The earnings growth is fabulous, but it is extremely expensive. And if we're in this environment where the market starts to focus on risks around Fed tightening, we are at risk of seeing a PE contraction, and that's what you're starting to see at the moment in the US, where some of these technology stocks we're starting, and especially below the surface. If there's a bunch of names, not necessarily your Facebook or your Amazon or Alphabet or Microsoft, but a lot of the other tech stocks have had substantial corrections, and it's not really represented in the index because of the weighting of those big tech stocks. So we are seeing the early stages of that PE correction rolling through the market, and so for that reason, Xero, yes, it's a buy. Fundamentals are strong. It stays in the model portfolio. If you don't already own it, maybe just be patient and wait for just to see over the next week or two how the impact of sort of this sell-off in US tech stocks, whether it stabilises or not. Insurance Australia Group under buy conditions, Afterpay under buy, APA, and now we've switched. So the difference here, we've gone through all the stocks that are under buy conditions. Now we move into stocks that are under sell. So the primary signal with these, the fact that they're under the sell signals there, and I'll just skip through these fairly quickly. So Northern Star, we don't mind Northern Star as a gold play, but preference is Gold Roads. Transurban bumping sideways, coming into the dividend at the end of this month. Newcrest still under lower lows, lower highs. Santos looks like the deal's finalised there with Oil Search taking over. Sorry, with Santos taking over Oil Search. Amcor we like as a defensive stock. Dexus not doing there at the moment. Centre Group avoiding that. ASX, terrific business, and you'll see a pullback. Maybe only a moderate pullback in the early part of the new year, and that'll shift back to buy signals, and we'll see it added into the model. Fortescue under sell at the moment, again preference Rio over Fortescue. CSL, little more selling here, and we'll see this shift to algorithm buy signals. Medibank cautious on that, expecting a deeper sell-off. QBE expecting a deeper sell-off. BHP again preference Rio now over BHP, and there we are to Endeavour. So just to share with you what's gone on the blog. So again, if you're joining for the first time, what we're looking at is the members area. You can subscribe to this technology for $1,320 for the year. If you don't already have a free trial, you can visit our website, and just to bring that into screen, under the home page, you'll see the free trial button. Simply click on that and go through and create your free trial. The part of the service is not only the model portfolios that we run, but the daily research that's posted on the blog. So to read that, the email goes out 11 a.m. each morning, but if you've missed the email and you want to come back and view what's been discussed, click on the news tab, loads up the dashboard. The signals for each day are automatically posted there. And just going through, just backtracking the last 7 days. So case of Brambles, we spent a bit of time on that tonight, so that's been something that's been discussed on the blog. Downer EDI, I think there's an opportunity there, support off 550, stock above the average. Blue Scope, slightly higher risk. I think there's maybe some evidence of some of these housing related stocks. Yes, they're expensive, and maybe we're starting to see some minor level of slowdown. So whether they can rally up and take out the old highs, but for the moment, support there in Blue Scope at roughly $20, and happy being long that and just place the stop loss below the 1930 pivot low. Sol Patterson, similar pattern here, under supported around $30 above the moving average, run the stop loss below that pivot low. So a combination, what you find is on the blog there's a little more discussion around shorter term trading, whereas the model portfolio, I'll finish on a review of the performance of that tonight, and you'll notice that the holdings in the model portfolio have been in there for months, or in some cases years. So if you're looking for shorter term trades across sort of a week or a few weeks, you tend to pick up those ideas through this blog here. Aristocrat Leisure under buy conditions, we looked at that this evening, support there at around $42. In the US, a couple of stocks that have been added into the US model. Collins Food, so supported around $12.50, so happy to continue to entertain that, as is the case with Treasury. Ramsay Healthcare, we spent a bit of time on that tonight, but around 65 support. Origin, I touched on that. It's now under algorithm buy conditions and expecting that 475 support to hold. Ramsay Health portfolio protection. So if you're looking for something to, if you're concerned about weakness in the US market and you're looking to have some short exposure in your portfolio, you can do that through the B-Bus, which is a double short on the S&P 500. So as the S&P 500 falls 1%, this goes up by 2%. So you're just starting to see the early stages of that moving off that $8.40, and then as of a few days back, we're trading up at around this $9.40, which is about where it's settled today. Origin we've already touched on. The resource is an alternative to owning Rio as example. You can own the OZR, which is a basket trade which gives you exposure to the top 10 holdings there, and that's been performing reasonably well. Probably doesn't provide quite the same leverage to an outright recovery in iron ore prices and Rio rallying as example, but it slightly offers a little bit of defensiveness with the gold exposure and energy as well. But the OZR ETF's traded up from around $12, now pushing $12.65. And again, just backtracking through the last 7 days, and there we are back to last Monday's webinar. So as I mentioned, finish this evening with a quick review of the top 50 models. So clicking on model portfolio, coming across here, selecting ASX 50. If you want to get notified of when something's added or removed, just make sure that envelope's green rather than grey. And the way that I like to look at this model portfolio, a couple of different ways. It's always good to have a look at it from a percentage standpoint, which stock's performing the best. In this case is ResMed. How many days has it been in there? 1100 days. So ResMed's up 140%. Computer shares also done very well, up 66%. Aristocrat up 54%. Goodman up 42%. Woolworths has done well, so for a defensive stock, it was added back in February. It's now up almost 40 or 38%. South 32's done well. So again, you can get an idea backtracking through there. So in percentage terms, what stocks are you buying today below the original entry? Well, Rio, which are comfortable adding that into portfolios if you don't own it. Lendlease, good recovery play, but 12 to 18 months out. The banks and the insurers are disappointed a little, and then you've got sort of recent signals there in Qantas and Woodside. So a way to have a look at it from which signals have been added most recently is to, rather than arrange it in percentage, Go to the days held, get the least number of days to the top, so we can see here that Origin was added 5 days ago, Qantas 13 days, etc. And as we work our way down the list there, you get to the stock that's been in there the longest, which is ResMed at 1100 days. So if you'd like to know more about the technology, please visit the website, take a free trial, and I look forward to speaking with you again next week.